Thanks a lot, Daniel. And hello, everyone. I'm Saurabh. I work at KPMG, and part of my role, I support our clients with CDR from strategy to compliance. I've helped banks, telcos, energy organizations, technology organizations building products for CDR. For this session, we have got Simone and we have got Lawrence. Simone is the CEO and co-founder of PayPal. She's also the chairperson of FinTech Australia. She sits on multiple advisory boards, and her company PayPal focuses on the payment initiation network. Lawrence White is a qualified lawyer, a senior advisor to Institute of International Finance, and in that role, he supports IIF on digital financing, digital assets, cross-border payments, digital trust and cloud. So we've got wealth of experience between Simone and Lawrence. And the topic we're going to talk about is around the ecosystem. What's worth protecting and what's worth regulating, and how do we drive value out of the ecosystem? The topics we expect to cover will be from multiple perspectives, from regulators, consumers, the role of banks, principle of reciprocity. So please join me in welcoming both Simone and Lawrence to the session. And if I may open up with, Simone, you first in terms of creating an ecosystem, sharing and protecting. What excites you, and what are some of the concerns you may have? And then Lawrence, you can follow.
Thanks, Saurabh, and thank you, everyone. I'm a little bit humbled to be in the presence of so many great minds in this space. But ecosystem is a really exciting thing to talk about because it's really the result that we all want to see out of all the different open banking initiatives around the world. I'm based in Australia, and we're really at the beginning, or the embryonic phase of that ecosystem creation, where it all feels a little bit awkward. It feels like we're forcing a relationship at the moment, and that's due to a number of things that I'm sure we'll be able to talk more about. Why is it exciting? It's exciting because I think that we are at a point in time where we're really seeing the foundations of how we interact as future consumers, future companies, and future banks, I suppose, and data holder entities. That's being created now. That's an exciting thing. It's not often that you get to participate in that period of history. That's like going back to that original Diners Club card that was handed across. That was the start of that network. So I think it's exciting, but obviously there are challenges that we need to recognise, and it's a positive sign that we've got so many amazing minds thinking about the various challenges.
Lawrence?
I mean, in terms of how to create an ecosystem for consumers, sharing, protecting, I think one of the points made earlier by one of our members, it was quite key, is that we need to get the economic incentives right. Now, obviously, consumers will participate in these open data ecosystems if they understand that the added value services they can access by sharing their data are easy to use, compelling, and trustworthy. For example, the principle of user centricity requires that the user should have control over the sharing of data through tools such as consent dashboards and a good and simple user experience. Financial institutions, utilities, and others sharing consumer data with accredited data providers need to have confidence that that data will be well looked after and subject to secure and legally enforceable privacy requirements. So I think one of the enablers here is clarifying the privacy regime as well as the standards applicable to those standards. And another detail that we've done quite a bit of work on at the IIF in the context of digital trust networks, where we have worked with the OpenID Foundation, is around the liability model for shared customer data and the necessity to get the liability model absolutely right.
Thank you for that, Lawrence and Simone. And you mentioned the customer centricity aspect, right? And we have heard a fair bit today from the regulators who are defining the policies and the standards, and we've heard from the banking fraternity around things they are doing to around CDR. One of my primary questions and the heart of it is around the ecosystem is around the consumer themselves. In your experience, what do you think are the challenges in driving adoption, acknowledging there have been, we've seen the J curve. The adoption hasn't been great early on in the regime, and it has taken a fair bit of time for various markets to pick up. So what do you think needs to be done, and what role would you see banks and the regulators playing in increasing that adoption rate?
I'm happy to jump into that one first. I think to Lawrence's point, having the right economics involved in the ecosystem is one of the most foundational things to drive further services and products and create better experiences for consumers. In Australia, we've obviously gone with the regulation and mandating banks be prepared to support open banking as the first stage of our CDR, and that's what we're now moving across to utilities, power providers, and so forth. I think that's had an interesting effect. Whilst it's obviously where we decided to drop the pin to start creating that network effect, it has meant, I think, that some banks have really thought about participating in the ecosystem from a compliance perspective, and that doesn't necessarily drive good product outcomes. It creates a minimum viable product type mentality without really thinking through how it could actually be a tool to bring them closer to their customers. Thinking about a network as an ecosystem, which really you can apply to open data, economic models like interchange, and I know that's the second reference to cards. I promise I don't normally talk about cards too much. That's something that hasn't really been brought into open data. We've seen I think in the UK, thinking about things like premium APIs for various data sets. And obviously in the US, where there was a market-driven approach that had economics at the backbone. So economies like Australia, where we haven't thought really, how do we incentivize people to participate? I think that's definitely something that we need to really get to. There's obviously other things in there, like how do we ensure that the consistency of experience? We've developed a payment initiation network completely separate to CDR. That's obviously got more commercial implications, but how do we then bring that back in so we don't have a fragmented experience going forward for consumers and create a confusing chain of consent? Yeah, that's probably, I'll leave that there and let Lawrence pick that up.
I mean, look, I think some of the other dimensions here are what is the data set that's required to be shared as a regulatory issue, and then what added value services and what additional data sets can data custodians like FIs, like utilities, share as a, with some kind of revenue model attached to that. And so the rules need to be very, very clear if it is a regulatory system to avoid that sort of confusion effect where, the lack of clarity in the regulations may drive an investment strike where otherwise FIs would be happy to invest, and of course it's in FIs' economic interest to invest in data enrichment, in data analytics, but if there's a fear of a free rider effect arising from a lack of clarity in the rules, then there may be a shying away from investment in those very necessary and desirable things. Now, of course, the economics will be gradually transformed as Brad Carr's mentioned earlier, more and more sort of sectors or more and more types of data sets get scoped in to these regimes, then there may well develop an exponential payoff. And so a little bit hard to predict, and I think Brad and others are right to say, let's get the settings correct and let the model develop organically. But I think the settings do require clarity around liability, a horizontal approach to privacy that's not sector specific as far as possible, non-duplicative privacy rules so that there isn't sort of confusion as to whether the general privacy regime applies or a special purpose open data privacy applies. Get the settings right and allow the system to settle around a new equilibrium.
That's great. Thanks, Lawrence and Simone. And you mentioned the future ecosystem. You mentioned the utility model. You mentioned kind of additional sectors coming, becoming part of open data regime. As kind of new sectors come in, what kind of use cases would you see emerging to drive the adoption in the ecosystem? And also keen to get your thoughts on how do you see the evolution of bank? Would they be, focused on banking services, or would you see there are use cases which may blur the boundaries around bank and a utility provider?
Yeah, that's a good question, Sarah. And I think that it's possible to see a future where your bank is your utility provider. They may apply in Australian terminology to become a data recipient as well as a data holder. And they may have a use case of accessing your utility data so that they can incentivize you to take a home loan with them by paying your utility bill. All of a sudden, they become your utility provider. And that's a really interesting shift of who's who as far as understanding which provider we're using for which service. And you can see how utility providers would be a little bit threatened by that model. It's probably easier to do that than it is to turn around and provide banking services as a utility provider. So I think that once we do see more and more sectors opening up and becoming part of the mandatory data requirements, there will be some really interesting use cases that do blur those roles. Will that be positive for consumers? Well, I certainly hope so, because that is the ultimate outcome. But I think it will be an interesting time once those use cases become available. And of course, we're talking about very crystal ball gazing here, given that we are still at the beginning. We don't really have even right access written into our CDR in Australia yet. So it remains to be seen, I think, but it's there to play for, certainly.
Lawrence?
I mean, very hard to look 5 to 7 years ahead, but I guess some of the possibilities might be around banks being reliant parties for some of the social graph data and novel forms of data that may be quite powerful in terms of credit analytics and pricing of products. So, I mean, I personally would be interested in a bank offering me a LinkedIn co-branded credit card, for instance, where in exchange for me sharing my LinkedIn credentials with the bank via a secure technology, I may get a keener price on the credit card because I'm seen as a better credit risk. Now, of course, that has a flip side for those whose social graph is maybe more marginal, and it may also incentivize fraud and fake social identities. So, of course, there are risks around all of that. Another couple of directions I think are very promising are government data, and that's been mentioned today. Governments obviously sit, as it were, on an enormous pile of data. A lot of it is very inaccessible, even between government departments, let alone to the public or to SMEs and to banks. And the tax example earlier demonstrates, or is a great example of the kind of richness of data held in government, which at the end of the day does belong to the citizen, or should be seen as citizen data. And so why shouldn't I, as a citizen, be entitled to tell the tax office to share my tax record in real time with my bank or credit institution? And lastly, I guess health data. I mean, the Australian regime seems to have scoped out health data, presumably because the politics are seen as a bit difficult because health is such a privacy-sensitive area. But all of these things can be managed with appropriate APIs and appropriate controls. And so why should health be seen as a sort of special case? And unlocking health data, you can imagine the kind of e-health apps and insurance, new types of insurance products, cheaper insurance for more healthy behaviours, etc., that should be able to emerge once health data is unlocked.
That's great. Thanks, Simone and Lawrence. Moving on and thinking about taking this thinking further in terms of cross-sector open data ecosystem, one of the, in the early times and perhaps even now, when we talk to clients, the question around reciprocity comes up. And reciprocity, in some ways, enables or allows for a level playing field, but in a very different way, discourages participation. A fair number of clients we've spoken with, I say, hey, if I participate early, would I have to share my data? And am I ready to do it in a meaningful way, right? In a way that it is real time, it is accurate, and I have the right data set to be able to contribute to the ecosystem. Can I get your thoughts around reciprocity, and how do you see that playing in a world where open data is not tied to one sector, right? So reciprocity may not be done in a way that it's equitable, right? How would you compare energy data against banking data? So can I get your thoughts around how do you see it playing out? It's a difficult thing to get right for the future ecosystem.
Yes, it is. It's very difficult, and I know that the Treasury here in Australia has come up against this issue a few times and haven't really, as far as I know anyway, they haven't to date made a really clear statement on how reciprocity will sit for our future ecosystem. In some ways, you could argue that reciprocity is actually a driver of an ecosystem. What better way to encourage use cases and circulate data than to have a reciprocal relationship in place? I think one of the things that is quite interesting in the Australian framework is to apply to become a participant in CDR as a data recipient. You need to state your use case and you need to be quite specific about that, and that is what you are able to use data for. I think that if you start thinking about reciprocity, you also have to start thinking about what's fair from a competitive perspective. If you state your use case explicitly, are you giving away some of your strategy? Can you get insights onto the strategy of others because they're declaring what they're going to do? And therefore, if you do need to share data with them, does that make it harder for you to want to collect and retain that data? So it's a really curly problem. I don't have the answer to it, but I think it's going to become more and more relevant as the ecosystem grows, which is what we're talking about in this segment. And I also think it's really relevant when you think about international large tech companies coming to countries to participate in a localized open data scheme. How does that affect the competition in the local sector, and how should reciprocity factor into those decisions?
I mean, we do see reciprocity is important and have done so for some time in our writings on open banking and open data. I mean, a couple of points there are, moving away from defining banking data or energy data by reference to the sector, and but moving towards defining it by reference to its usefulness for that particular activity. So data that could be useful for banking obviously goes beyond data that's held by banks, right? Now, that goes a little bit too broadly if you then scope in all sorts of value-added data, which is proprietary, and which is the product of hard work and sweat. Now, of course, FIs will tell you, even taking on board and keeping clean and secure raw customer data is an expensive exercise, and to that extent, open data models that require the sharing without any recompense, may not be sustainable in the long run. But around value-added data, it needs to be both the client permission and the permission of the custodian or person who has invested in deriving that data that's required, I would have thought. And so, that puts a natural limit around the reciprocity obligation if it's just confined to more or less raw data. And drawing that distinction in practice would be obviously quite difficult. But I would like to echo again Brad Carr's point earlier that we do need to move away from a sectoral approach. I mean, privacy laws in the US obviously are sector by sector. Banking sector has its own Privacy Act, HIPAA, the Health Insurance Privacy, and so on. And then the states have their own. We don't want a patchwork of rules, sectoral patchwork of rules around sharing of customer data, because at the end of the day, as our colleague from the World Bank has pointed out, this is a global issue. And so to have sectoral rules and a patchwork of sectoral and national rules, and even if you have global standards on some issues like digital ID, is not conducive to a fully interoperable, open, and yet well-controlled and well-permissioned marketplace.
That's great. Thanks a lot, Lawrence. And as we talk a bit more about cross-sector, CDR or open data, from a regulation perspective, doesn't operate in isolation, right? So we spoke about privacy laws, we spoke about competition laws. In Australia, we have NPP, which is pushing for real-time payments. In other markets, and we think about energy, we talk about critical infrastructure at a national level. Now, specific to payments, and Simone, probably closer to the work you do, there is an intersection between payments initiating out of one regime and CDR, and we heard from Treasury in the first session. The first priority for them as part of action initiation is payment initiation. How do you see some of these regulatory forces converging, and what are the implications for organizations and consumers?
Yes, so I think that the way that our payment initiation developed in Australia was really relevant to get to market quickly with that. Had we decided to wait and say, we won't bring about a payment initiation infrastructure over the top of our real-time payment network until CDR is ready to support that, we would be a couple of years out still. Instead, Pay2 switched on officially on the 1st of July. And it switched on outside of the scope of CDR, which means that companies who wish to participate in Pay2 as a third-party payment initiation mechanism for a real-time payment to be initiated from a consumer's bank account into a business's bank account, they need to be accredited to do that on a separate framework to CDR. Yes, having a CDR accreditation does make that easier, but it is a separate accreditation. It's a separate set of costs. It's a separate set of assessments. And that's probably a price that we've paid for speed to market with Pay2 and some of the, I think, strengths of how that framework's been designed. But the price we will pay in long term is to continue to support two separate types of accreditation, and then thinking about how Scott Farrell's Future Directions of CDR recommended that payment initiation as a set of action initiation is absolutely something we should do, but he wasn't very prescriptive on how that should happen because he's very clever. So do we then think about CDR going, okay, we just want payment initiation, and as a bank, if you've got Pay2, then tick that box, that's good, there's no more you need to think about? Or is it going to be something else that we then need to think about, and will that operate alongside, in competition with, or completely separately to Pay2? So I, from my personal perspective for my company, I would like nothing more than to think about a future where Pay2 and CDR coexist under a framework which allows accreditation between both frameworks. But there are some fundamental design differences that have been made. We don't have a single repository for consent mandates in Australia. Pay2 does. It's called the Mandate Management Service. So there are some inconsistencies with that might need to be thought about more carefully.
Thanks, Lawrence. Any comments from your side?
I don't have any specific comments on the payment initiation point. Obviously, it is required in some jurisdictions and not in others, and consistent with a broad approach to open data, you would see that as an extension. I think the mandate management, consent management is key here. The user centricity would allow a very easy view of all the consents that are active for that user, and that an easy revocation of any and all consents, so that the user is not hunting around trying to revoke consents if there's been, for whatever reason, whether it's relationship breakdown or or any other reason that a user is changing, or just a bad UX, the user no longer wishes to use that particular provider, that's absolutely key. And then I guess, to limit fraud around consents for people who've passed away and all those sort of issues. There needs to be really serious thought given by the registry holder or custodian of those consent type fields, and there needs to be, a lot of secrecy and security around that data.
No, that's excellent, and no, that's very good. And I think great you bring that point around protecting. And talking about, we've spent a fair bit of time talking about how to grow this ecosystem, what incentives, what needs to put in place. As we head towards the end of this session, on what is worth protecting. And if you imagine, a few years from today, where we have a vibrant open data ecosystem with multiple sectors being part of it, one of the expected downsides is that data will flow from environment in which it is currently heavily protected, such as banks or trusted institutions, into environments which would not be that heavily protected, especially traditionally they haven't been. What springs to your mind, and from a regulatory perspective and from a consumer perspective, what facets would you think needs to be protecting in a couple of years from today? And what things we need to take care of? Simone?
I think that at a very, foundational level, we need to get the accreditation correct so that companies are operating in this space in a way that is compliant and secure. I think that we need to really think about the messages that we're giving to consumers. These are all new tools. Most people that I know don't sit around thinking about these things, but people will use a tool that is useful in their daily life. Being able to recognise what is a secure and appropriate versus a non-secure one is an extension of some of the awareness that people have now around being safe online. But that needs to get better, and it needs to be relevant to the tools that the consumer is using. I also think that we need, it's been mentioned a few times, the liability framework needs to be appropriate. And the, I suppose, addressing issues as they arise, and they will arise. We will have instances where there is a collective intake of breath as something goes a little bit awry and not according to plan. Really thinking through what the remediation is, I think, will be a really important thing. And finally, thinking through what type of assets are being created that are going to be the honeypots of the future. That's a really important thing as well.
Maybe just to pick up that point on liability, the IF has partnered with the OpenID Foundation, not only on the OpenID Foundation's technical standards, but also on principles for digital trust networks. That in one of the annexes there's some guidance on a possible liability framework that a digital trust network may wish to pick up and look at and embed in its scheme rules or other governance rules. And of course, there are other frameworks around it, trust over IP, governance frameworks, and so on. But that's the first framework that I've seen, our own one, the Principles for Digital Trust Networks, that's delved into the liability picture in as much detail. And that was put together with the assistance of Pinsent Masons, a British law firm.
Can I just add one point on that? I think that's such a really strong point to make, because what doesn't exist to support this growing industry is insurance. And without appropriate liability frameworks, it is very difficult to find insurers that are willing to participate at an industry-wide level. And that is going to be a real limiter of companies being able to participate and being able to participate at scale. It's already being a big issue for a lot of companies in the space. And I think that's one of the reasons, Lawrence, is that lack of, consistent and express liability frameworks.
I'll put a link in the chat.
That's excellent. We are at time. Thanks a lot. Please welcome in thanking both Simone and Lawrence.